personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime.
With Budget 2025 just around the corner, many taxpayers are wondering, will it change how much tax you pay? Will Finance Minister Nirmala Sitharaman introduce new slabs, better exemptions, or even tweak deductions? And more importantly, should you opt for the old tax regime or shift to the new one? Today, we'll break it all down, compare both regimes, and help you make the best decisions for your tax savings. Make sure to watch till the end to see real examples and comparisons that could save you thousands in taxes. The old tax regime allows individuals to claim multiple deductions and exemptions, making it beneficial for those with structured tax planning. Deductions like ATC, ATD, HRA, and home loan interest significantly reduce taxable income. However, it requires proper documentation and detailed record keeping, which can be cumbersome for some taxpayers. Introduced in 2020, the new tax regime aims to simplify tax filing by offering lower tax rates by eliminating most deductions and exemptions. Taxpayers opting for this regime cannot claim benefits under ATC, ATD, HRA, or home loan interest, making it a trade-off between the lower tax rates and available tax-saving options. The government has been pushing for a shift towards this new structure, making it more attractive with potential revision in Budget 2025. If you rely on deductions to lower your tax burden, the old regime works better. If you want a hassle-free, straightforward tax system, the new regime might be a better choice. With the budget announcement on February 1st, there is a speculation about potential changes to tax slabs and benefits. Basic exemption limit may increase to Rs 10 lakh in the new regime. The new 25% tax slab could be introduced for middle income earners. Standard deduction might be raised to Rs 1 lakh, benefiting salaried employees. If these changes are implemented, the new tax regime may become more attractive. But will it be enough to encourage more taxpayers to shift? Let's compare the numbers. Alright, let's settle this old age debate. Old tax regime versus new tax regime. Which one saves you more money? Think of it like choosing between a buffet and a la carte menu. The old tax regime is like a buffet. You get multiple options or deductions, but you have to eat everything to make it worth the price. The new tax regime is like an a la carte. You pay only for what you eat, but there's no fancy add-ons. Let's break it down. In new tax regime, if you have income up to Rs 3 lakh, there's no tax. Between 3 to 6 lakh, it's 5%. 6 to 9 lakh, it is 10%. Rs 9 to 12 lakh, it is 15%. And for 12 to 15 lakh, it is 20%. And above 15 lakh, it is 30%. Sounds simple, right? But there's a catch. This regime says no exemptions, no deductions, no stress. Imagine you walk into a mall with a discount coupon, but the store says, "Sorry sir, no offers on this sale." That's what happens here. No ATC, no ATD, no HRA benefit. Now let's check out the old tax regime, the traditional tax plan that comes with a full discount package if you know how to use it. In old tax regime, if you have income up to 2.5 lakh, there's no tax. Between 2.5 to 5 lakh, it's 5%. 5 to 10 lakh, it's 20%, and above 10 lakh, it is 30%. At first glance, the new tax regime looks cheaper, but old tax regime has a hidden superpower: deductions. Key deduction under the old tax regime are ATC of 1.5 lakh, ATD up to 75,000 for health insurance, Section 24B for 2 lakh on home loan interest. HRA depends on rent and salary structure. So which one saves you more money? Here's a quick hack. If you're claiming deductions worth at least Rs 4 lakh, the old tax regime will likely save you more. But if you do not have many deductions, the new tax regime could be your best bet. Alright, we have seen the numbers, but let's make it simpler. Which tax regime should you choose? Think of it this way. Are you a no-hassle, straightforward taxpayer or a smart planner, max-saver taxpayer? If you prefer simplicity and higher take-home salary, pick the new tax regime. No paperwork, no receipts, no tax planning headaches. Lower tax rates, straightforward calculations, best for salaried individuals who do not invest in tax-saving options. But if you want to maximize tax savings, stick to the old tax regime. It works best if you claim deductions worth Rs 4 lakh or more, huge savings on HRA, home loan interest, insurance, and investments. Ideal for people with financial commitments like EMIs, rent, or high medical expenses. But wait, there's a catch. One big factor that can swing the decision: HRA. If you get house rent allowance or HRA and live in a rented house, the old tax regime could save you lakhs. But if you own a home and do not have major deductions, the new tax regime might be better. For example, let's say your salary is rupees 60 lakh. If you claim rupees 4.5 lakh in deductions, your tax savings under the old regime will be rupees 5,720. But if you also claim HRA exemption of rupees 12 lakh, your tax saving jump to 4.77 lakh. So before choosing, do the math, because the right decision could mean more money in your pocket. If the basic exemption limit rises and standard deduction increases, the new regime may become the default choice for many taxpayers. However, unless HRA and home loan benefits are incorporated, the old regime will still remain attractive for high deduction taxpayers. So which tax regime do you think works best for you? Are you team old regime or team new regime? Let me know in the comments below. We'll be covering Budget 2025 live on February 1st, so hit that subscribe button and turn on notification to stay updated. Like this video if you found it helpful and share it with anyone who needs tax clarity before Budget 2025.